What's going on, guys? It's Matt back with another review. Let's hop right into it. So we're going to start on a dollar index as usual. Today's Wednesday, midweek. So this is Wednesday's candle, Tuesday, Monday. As we mentioned, we had this fair value gap here. As you can see, we're still playing inside of it. I'm going to add another level, the 50% consequent encroachment. I've been speaking on this, but I just didn't add it. But as you can see, yesterday we tagged into that level. So let me try these out. So yeah, we're still watching this fair value gap, the low end, the high end, and the consequent encroachment. We're still also looking at the volume imbalance above price. But Monday, Tuesday high, and now Wednesday. If Wednesday stays below Tuesday's high, we can probably see a Tuesday high of the week, as we mentioned on the weekly review. So Monday, Tuesday high of the week, Wednesday trade up, and we can probably look to come lower to blow out this swing low. Capitalize on this bullish order block, and then eventually try to complete our market maker sell model, with this being original consolidation. Okay, so yep, that's what we're looking at for today. So today we might see either a large range day lower. Probably I'm gonna add another level as well. We have this rejection block here. So these are the levels I'm watching. We might end up just closing at the rejection block or either the old low. And if on the upside, if we blast through Tuesday's high, we're going to be looking at the upper end of this fair value gap from this candle's low to this candle's high. The bond market, as we mentioned, price from this low to this high came down into a discount, broke structure, and retraced all the way down back into this low to this high discount. So now we're in a consolidation. But today's Wednesday, Tuesday, Monday, you see we opened, traded down into the rejection block. We had some institutions buy. We had some sponsorship on the buy side. I'm going to add another level today. We have this last down close candle that got broken to the upside. Now we're trading down right now. So we might use this bullish order block to buy up to get the buy side liquidity above these two highs and this high, and eventually looking to rally up above this original consolidation here, because these highs look too clean. So we might see some buying on the bond market today. Euro dollar's been distressed just like the dollar index, but when small range days happen like this, they are usually followed by large range days. So we just have to stay patient. So as we said, we had this fair value gap here. I'm going to add another level as well, just like how I did on the dollar index, and we're going to mark out that 50% level here. Looks like we hit it to the pip. Oh, what's going on? Okay. So yeah, fair value gap, 50%. We tagged it on Tuesday. So today's Wednesday, Tuesday, Monday. Open, traded lower on Tuesday. Potential Tuesday low of the week. Just the opposite of the dollar index. So today, Wednesday, we might see a blow through this old high. So I'm going to just draw this old high out. And we have this rejection block, which we already hit on Tuesday. That's what made the high, and then it made the low on the 50%. So I'm going to just delete this, keep it clean. But just know we're monitoring this, the highest up close, which is the rejection block. So we might see a rally today above this old high. If not, and we see a move lower, we're going to be monitoring the low end of the fair value gap from this candle's high to this candle's low. Cable, the pound dollar, as I mentioned on Saturday, that weekly fair value gap could play a role in the cable going lower, which we're seeing right now. Today's Wednesday, Tuesday, Monday. Monday we opened, and now we've been trading lower ever since. We have another level that I didn't mark out because I did not know. I didn't have future reference on the pound. I did not know when we were up here if we were going to continue higher or lower. But as you can see, we closed in this gap here, this fair value gap. So I'm going to draw that out. We might see some institutions step in on this candle's high. So if not, we're going to be looking for the 1.26650 level. And then if we blow through that, we're going to be looking to capitalize on this bullish order block. But if we are bullish and the dollar index is bearish, we can probably see Wednesday low to week profile, because we already blew out Tuesday's low. So this is Wednesday, potential low to week. And then we could see Thursday, Friday, try to rally back up into this high. And then that higher end of the weekly fair value gap. And our last pair is the euro pound. And euro pound still been in a little bit of a consolidation. And as we marked out on Wednesday, Tuesday, Monday, so Friday last week we blew out this sell side liquidity pool, and ever since we stayed in a consolidation. Yesterday we actually rallied into the rejection block that I outlined, but then today, Wednesday, we opened, traded lower into this lowest down close candle, which is a rejection block. So I'm gonna actually clean up the euro pound. I'm gonna keep this here because, as you see, we had some bullish support right here, but it was actually the rejection block here. And I'm gonna just add another level here, this newly formed swing low. That's gonna have sell side liquidity under there. So I'm gonna just move this here. We have a sell side liquidity pool here. But if the pound dollar looks like it can go higher, and we just ran into a premium on the euro pound, which is this rejection block that we outlined above this buy side liquidity pool, which is just a swing high, we can probably see lower pricing down into 0.84490 level. But if not, and we do see bullishness on the euro pound, we're going to be blowing out these highs here into this gap, last two up close candles, and then a higher time frame level, which is the 87400 level. So that's it for the daily review, and I hope you guys enjoyed it. Remember, I'm not a financial advisor. These markets have risk. Stay safe, guys.